Crude corrects. Brent trades near $87 a barrel as demand concerns rise. Stocks of ONGC and Oil India, the upstream companies, correct.
The government rolls back export duty on steel, iron ore and pellet-related products. Godavari Ispat surges closer around 15% as that's a big pellet exporter.
RHI Magnesita will acquire the Indian refractory business of Dalmia Bharat Refractories, strengthening its presence and offerings in a key growth market. The stock higher by 3.5%.
Co-founder Mohit Gupta resigns from Zomato in yet another high-profile exit at the food delivery giant. Brokerage house Jefferies, meanwhile, does not see any big disruption to the business from this development.
It's a good listing for two companies, Archean Chemicals and we had Five Star Finance business as well. Both of them, Archean Chemicals did well. Five Star Finance listed at a discount but now is off the lows.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, Mangalam, we come out of a weekend and it seems the Bears, they are having the control this morning. But many a time we have seen that they've had some control for some part of the day. However, the Bulls, they come back in style and they fight back. So let's see whether or not that's going to happen today. 18,150 odd. That was the low of the day. We're a little bit off those lows. So let's see how things shape up from here. But let's focus on the big story. That's the relaxation that we got on export duty on the ferrous space. To chat up about that and understand the impact for individual companies, we're joined by Mr. Manish Sarda, the director of Sarda Group, who joins us to discuss this decision. And in a bit as well, we will be joined by Godavari Power and Ispat. Hi Manish, good morning. Good to speak to you after a while. Well, if you could tell us first up itself, we have a couple of brokerage reports that are suggesting that pellet producers have pushed through a price increase in the last couple of days. You do produce pellets, right? Is that the case? Has there been a price revision on pellets, on billets? I believe this notification came and in the next 12 hours, some of these prices already had moved up. Go ahead.
Yes, Nigel, the prices have moved up, but the prices also had moved down quite a bit. We had seen billet prices drop by 3,000 rupees and we had seen pellet prices also drop down quite a bit. And the pellet prices which have been increased is in the tune of 700 rupees after the duty was removed.
What do those prices now currently stand at? I mean, in the second quarter, they were a little around that 85-50 odd mark.
So right now, people are quoting 9,700, in between 9,700 and 10,000 rupees. Okay. But we yet have to see the stabilization, at what price levels the prices stabilize.
Interesting. All right. So, they're quoting higher levels, but there has been a price increase and you're confirming that. Even billets, you produce some, right? If you could tell us what has been the price increase out there on billets. And Manish, for your company, even prior to this imposition of export duty, you all weren't exporting, right? Could you clarify that?
Yes, we were not exporting. In the last 4 years, we have exported very minimal quantities as we are very happy with the domestic demand, and the domestic realizations are also good for us. And we are a landlocked plant. So for us, exporting out is not the best option. And it does not really impact us whether the duty was there or not there, as we are quite insulated from that whole paradigm.
No, it impacts you, but it's an indirect impact to you, right, Manish?
It does have an indirect impact. Like on the overall steel market, it will have an impact. The duty removal is a welcome move. It's a fantastic move. I mean, it will give push to exports, and the lost space in exports will be gained back by the country.
You were talking about prices of billets. How much does that account for in your overall scheme of things?
So billets we normally don't sell too much in the market because for us it's a captive use. We are producing wire rods and HB wires. So basically, we tend to use most of our billets captively.
And has there been a price increase? Yeah.
Billet prices have also moved up by 3,500.
So, but most of the billet that you produce is used captively. So does that mean your margins improve from here versus competitors? I mean, just wanted to understand, is the worst of margins over? Because in the past, you've done margins closer to 40% as well.
I think, Nigel, the margins will remain quite good, but we have to also see the impact of raw material pricing, which comes in the next few days, because raw material prices will also go up. We have seen the duty, being reinstated in coking coal and also coke. So 2.5% on coking coal and 5% on coke. So we'll have to see what happens on the energy side of things, because the raw material prices will go up. Even we believe that iron ore prices will also go up.
Right,
So we have to see what margins will come in the next few days. We'll come to realize, after the raw material push is there.
Okay.
So but margins will remain healthy. I think the demand on ground is good. I think the export demand will also come back in place.
You're saying demand on ground is good? As you're seeing it, I believe it's a little softish in the past couple of weeks, even post-festive.
Yes, but it's because of the global challenges are there in the market. But infrastructure demand will be good in India. As I mentioned previously also, that overall infrastructure demand will be good by India because we are doing a lot of infrastructure projects.
Got it. All right. Manish, also, you have diversified a little bit, right? You had got that hydro project. And the last time I think, you guys chatted with Manglam and me, you all were talking about that EBITDA from the hydropower project to clock closer on 200 crores of EBITDA for FY23. That's on the cards?
Yeah, I don't have the exact numbers right now, Nigel, but I think the hydropower projects all are on track. And we are expecting healthy EBITDAs from all the hydropower plants.
All right, FY22 was close to around 170. You believe that could be around 200. You are on the right track for that?
So it also depends upon the rains and the weather gods, right? So I won't be able to put the exact numbers right now.
We'll hope and pray that they bestow all their generosity upon you, Manish. But, final question then. This is something that shareholders have been asking. 1,000 crores was your debt at the end of the previous year. The first half, we look at that number, it's close to around 700 crores. What does it look like by the end of this year?
The debt?
Yes.
No, we are not taking any more debts. We are going to maintain our debts at the levels which they are at the moment and probably reduce it going down further.
Much? Reduce it by how much?
I think the gross levels are around 1,300 CR.
Okay. The gross, but the net level is around 700 crores.
On the console level, yeah, I think on the individual flagship company, I think there's hardly any debt. It's around roughly 200 odd crores. That's it.
You're basically telling us the debt will remain at current levels.
Yeah.
Yeah, as a standalone entity, you don't have debt, but we are also including the hydropower project, right? I think that's where bulk of your debt is, and you've been reaping that. Okay, all right, Manish, thanks so much for stopping by. You've given us a fair bit of details. So prices have moved up marginally on pellets as well as on billets. You're optimistic on the demand outlook. Debt will hold at current levels, and hopefully the worst of margins are behind y'all as well. Well, we'll try to get in the management of Godavari Power and Ispat in just a bit. But for the time being, let's get to our special segment where we get you a few ideas for profit from Money Control Pro. Nandish Shah or moneycontrol.com joins us to talk about a stock that he's tracking very closely. Nandish?
Today we are going to talk about Britannia. It is one of India's leading foods company with one of the most trusted food brands. Britannia's product portfolio includes biscuits, bread, cake, rusk and dairy products, including cheese, beverages and milk. The September quarter results were above expectation on the back of 6% volume growth and improvement in gross margins. Britannia continued to gain market share for consecutively 38 quarters in a row. The adjacent categories have witnessed good growth sequentially across channels and geographies. New product contribution to overall sales stood at 3.5% to overall revenues, which management intends to bring it to 5% in the medium term. International business is well on track with Nepal, Middle East and African markets likely to witness growth on the back of distribution expansion and increased share of in-house manufacturing. The company continues to increase its direct reach by 20% and has added 9 lakh outlets in the last 9 months. In rural India, preferred dealer count stood at 28,000, addition of 2,000 in the last 6 months. In terms of capex, management has guided to spend 650 to 700 crores in FY23 and is looking to set up 4 plants in Tamil Nadu, Uttar Pradesh, Bihar and Odisha. Being a market leader in the biscuit segment, Britannia was able to take price hikes and was able to pass on the increased raw material prices. Now with cost pressure easing, we expect volume growth to pick up in the medium term. It is trading at a PE multiple of 48 times FY24 earnings and we remain positive on it.
All right, we take that point, Nandish. Thanks a lot for that. That's about Britannia. Take a short break, come back. We will have the management of Godavari Steel and Power with you. Let's continue our discussion on the steel and iron space, as the government has rolled back most of the export duties on steel products, and as a result of which one of the biggest beneficiaries are the pellet manufacturers. We have Abhishek Agarwal, who's the Executive Director of Godavari Power and Ispat, joining us. The street likes the announcement that came by, but we want to hear from you, Abhishek. What exactly does that mean for you? I mean, prior to the duty restrictions, exports contributed to what proportion of your revenues? And now that it's been rolled back, do you think it will come back entirely?
Good morning. So on the proportion of export, for post the duty, the export was practically zero. We were selling everything domestic, and to be honest, I think this is an advance gift by the honorable government and Narendra Modi ji, honorable PM. Going forward, we'll start exploring the export market, and hopefully in the next quarter we should start exporting.
No, what we wanted to know is, obviously, after the export duty, your exports were zero. What we wanted to know is, prior to the duty, what proportion, what volumes would you export?
Prior, we were doing almost, I would say, 70% of our merchant sales with export volumes.
Okay.
And since the duties roll back, we hope once we get in the market, we will start exporting again.
Okay.
On volumes.
All right. Hi, Abhishek. Good morning. Nigel on this side. Well, you're a clear-cut beneficiary, right? Because you produce pellets, you're exporting 70%. Now you get a re-entry out there. And that's why you're beaming. You're looking pretty happy about that. But let's focus on a couple of details. You would have got into some contracts with the domestic manufacturers, right? Maybe for the next 1 month or next couple of months or so. So by when can you see this exports picking up that you're talking about back towards that 70%? Will it be now contracts for Jan or Feb or for when?
I've already been saying, we usually have an order book about 45 days. So as you correctly mentioned, so we will start looking to exports in the month of Jan now. We have order books till December for the domestic supply. And from January onwards, we will start exploring the export market.
So, Abhishek, just a counter question. We had Manish Sarda who joined us just before you. And he was suggesting that pellet prices have been increased in the domestic market. I think the rough number he gave us was around 700 rupees, but the push is for around 1,000 to around 1,400 rupees. Now, you produce high quality pellets. Could you tell us what is the price increase you have pushed through in the last couple of days? And more importantly, what is the pricing difference between your current prices and what is prevailing in the export market?
Okay, so, as Mr. Manish Sarda mentioned, yes, on Saturday, all pellet manufacturers have increased the prices by about 700 rupees. And pushing towards 1,000 rupees on the domestic side. That is for the normal grade 63 which we produce. And on the 65 side, the high grade pellets, there's an additional 1,000 rupees premium. But as I mentioned, we have already order books till December end. So the new prices will start probably prevailing from January onwards. And on the export side, we just entered the market today. We're trying to analyze what's going on. As you're aware, international market also is quite weak because of energy crisis. But I'm hoping the good thing which will happen is the selling pressure which was there on the domestic suppliers will ease out quite a bit.
What does it mean for players like you? I just wanted to understand, what is the price difference between domestic and exports? And from January onwards, would it make sense for you to export more or maybe sell it domestically only because given the prices?
Currently, the domestic prices and export prices are on the same levels because of China, COVID zero policy. There has been quite a downturn. Although China has been trying to, ease out the COVID situation, because of which the market has gone up, the commodity market has gone up. But at the moment, I would say the prices are on the same levels, and it's not necessarily we will start exporting in January. We will analyze commercially what the benefit is, and we accordingly will take a decision. It might be domestic. And when might you export? Okay,
but it's good news for you, as of now, because you're getting, you have another option. If you want to export, you can export, and then you'll have to take a call based on the prices. Abhishek, you joined, I think, just around a week or 10 days ago, and you were guiding for margins of 20%.
Right.
Do you want to revise that number now? Do you think you can revise it a little bit higher?
I think it's too soon, Nigel. We still need to get into the market, analyze the number, see where the market's heading, and then probably revise our future projections. But I would still say 20% is quite achievable. Anything on the upper side, we still need to analyze and make a comment.
All right, just a final quick question out of curiosity. From January, if you start exporting, would you have a sense of how much volume can you export this year? And maybe next year you'll obviously go back to that 70% that you would do earlier. Any sense in the fourth quarter?
To be honest, there might be a scenario where we don't export at all because the domestic prices are better than the export market. So as I said earlier, we will analyze, see the numbers and the expand realization, and then take a call.
Okay, all right. Abhishek, just to clear the air about the price increase you've taken, you said around 700 rupees is the price increase you've taken on pellets, right, over the weekend?
Right.
And for the grade that you sell, it would be higher because you sell the higher grade.
That would be about 1,500 rupees.
300. 300 higher. 1,500.
Yeah.
So for the grade that you're selling, it's around 1,500, and for most of the market, it's around 700 rupees. Are we getting that correct?
Right.
And it's
correct.
And you think it'll be absorbed, or do you think it'll be pulled back? We had an analyst actually earlier today who suggested maybe things are not as strong as on ground, and maybe the iron ore prices as well, if they are initially pushed through, first demand needs to catch up, then only it will be absorbed. What's your take? All this price increase will be absorbed, or you believe there could be some pullback?
See, I totally agree, with the comments made right now. So, we need to analyze how the demand is right now. But initially, because sentiments since the exports are open now, there will be an uptick in the prices. How much can be absorbed in the market? We need to see, it's too early to comment.
And in the meanwhile, has there been any noticeable decline in raw material prices? Any noticeable change, so to say, in raw material prices?
See, I would say till Saturday, the raw material prices were on the declining side, be it coal or be it iron ore. But post Saturday, we are still waiting for the new numbers from the market.
Okay.
So there's too early to comment anything, yeah.
Okay, all right, Abhishek. But we look forward to having a chat with you. We'll request you to come on the show, say, in the next couple of weeks, and we'll want to get a sense on demand and how much of the price increase has been pushed through. But for the time being, you're clearly happy with the move that's come about, because otherwise, from the month of May itself, those pellet prices had seen a sharp decline of a few thousand rupees or so. Good speaking to you. Well, on that note, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action. Welcome back. Well, the mid-cap index actually is doing a relative outperformance. But don't be fooled, because the breadth of the market is still in favor of the number of declining stocks. The crisscross line should come off for you. Now you have close to 1,800 stocks that are declining in comparison to around 1,000 stocks that are advancing. And a few notable names from the F&O market. You have Persistent Systems that's moved a little bit lower. Biocon as well has done a quick U-turn. And Alchem Laboratories as well have seen a bit of a downtick. On the flip side, the ones that have really been catching the attention, the banking names, some of those PSU banking names, they are flying away. Union Bank was trading in the red, that's moved into the green. PNB, that was trading in the red, that as well has moved into the green. So Mangalam, a few winners. Canara Bank as well. Just pull up the PSU banking index, actually should come off you. What a dream run it's had, right, Mangalam?
A dream run indeed, and valuations are supportive as well. Things are looking well for them. Just looking at a couple of names in that space itself, Escorts has moved to the high point of trade. The management has given their long-term guidance, 2.5 times revenues, margin improvement, etc. The stock had been a bit of an underperformer over the recent few days, so now has come about and doing well. And the final one that I'm looking at is 5-Star Finance. It opened with a discount to the issue price. That dip seems to have been bought into, and as we speak, it's up to at the high point of trade. It's recovered almost 14-15% from lows. 7.5% is what we're seeing in terms of gains on 5-Star Finance, the new listing that has come about. There you have it. That's 5-Star Finance. Let's wrap up on this edition of Chartbusters. But as we do that, let's also get you some market opinion. We spoke with Andrew Holland this morning, and this is what he had to say.
Emerging markets will be the place to find growth and a pickup in the global economy. Obviously not initially, but that's how the market will play it. But in that, interestingly, whilst everyone's talking about emerging markets, I think the overweights are going to be more of the exporting type countries like Korea, China, which is obviously, we've seen some kind of pickup there from the very low levels.